Hey, gang, welcome to another episode of the Power of Nine podcast. I am your host, Aaron Eggert. Today's guest is the CEO of Flagship Bank and president of Security Bank and Trust, Andy Schornack. We're going to dig into his rural upbringing, what it means to partner with a community bank, and why he is so active on Twitter. Andy, welcome to the show.
Thanks, Aaron. I appreciate that introduction. At least you didn't leave with I have no friends because I'm on Twitter, right? Isn't that what
Darren Lynch said it, and I was wondering if it was going to come up in this show because Darren Lynch said that Twitter's for people that can't text friends or have no friends to text, basically something like that. Yeah, what a goofball. So I'm going to talk about that though a little bit because you're not going to find many CEOs of banks that are active on Twitter, and I want to talk about why. But before we dig into all that stuff, will you share with me your pronouns?
He and him.
All right, awesome. So you grew up, boy, I love this. So many people, I think it's just because we're from the state of Minnesota. So many people grow up with rural roots, right? Or rural upbringing. And so you were born and raised in Perham.
Yeah, I was raised in Perham. I wasn't born there, which is a small side deal. But no, I grew up my entire life up there in Perham and thoroughly enjoyed it. Great community. People are just exciting. Obviously, it's a lake community. We got all the lakes around us, but fortunate place to grow up. I mean, it's just great school systems, great businesses, great, it takes a village. And, I think when you live in a town like Perham, it really kind of builds that because you learn what you had when you grew up and what you appreciate in it. And it was a blast. I had a great childhood.
Where were you born then?
Out in Wyoming.
Wyoming? Yeah. Wyoming, the city or the state?
Oh, the state of Wyoming. Yeah. All right. So I got a little cowboy in me.
You do have a little cowboy. When did you move back here to Minnesota then?
Oh, when I was less than 3 years old. Okay. So, they had the oil rush back in the late 70s, early 80s out in Wyoming. So my parents moved from Perham area, New York Mills area to Wyoming to kind of to sell mobile homes. And so they went out there and sold mobile homes during the oil kind of crazy days and then moved back when that started to kind of calm down in the 80s and set up root back home. It's kind of it's kind of a funny story. So my dad sent my mom home to buy a farm and she bought a house. Not on a farm.
Not on a farm. Oh, that's great. So you didn't grow up on a farm though, did you?
No, I didn't, and that's the reason why. It's because my mom didn't.
All right. Okay. So that house that your mom bought when she came back here, is that the house you grew up in then?
Pretty much until I was about 10. Then they moved to on the lake, up in Perham there, Little Pine Lake. And which is great. That's they got a Zorbas and it's a great spot.
Well, if it's got a Zorbas, it can't be bad. Good pizza.
Yeah, exactly.
No commercials for Zorbas on here, but they're not a sponsor yet. Or maybe a little bit. So what was the family dynamic? So brothers and sisters and stuff like that?
Yeah, so I got an older sister, younger brother. And so my sister's just a couple years older than me, and my brother's about 4 years younger. And we just had a blast, a lot of golf, between the three of us, and kind of working in the family businesses. So good close knit relationship. My brother still works with me down here in the cities. He runs our Isanti flagship branch, and so the family stays close.
I met your brother at your client appreciation event, and the apple doesn't fall far from the tree when it comes to siblings in your family. You two you kind of act a little bit of the same, you sound a little bit of the same, and look a little bit of the same, not a ton, but you can definitely tell you're brothers.
Yeah.
Yeah.
He's better with the BS than I am. I'll tell you that much. he can get you rolling for hours. It's a good time.
I love it. So what did your parents do when you were growing up?
So my parents are, small business owners. So my mom has a ladies fashions in Perm, and she actually started that in the late 70s. So actually ran it remotely, while we were out of state. And my dad ran a mobile home business when he moved back, and then went into industrial laundry. And that's kind of what I grew up. I always say I grew up in a sweatshop because when you're washing clothes, drying clothes, ironing clothes, that kind of stuff, your whole, that's kind of how I grew up. And a lot of our extended family also is in small business. And then my dad has since then, he works for RV Communication Systems, which is kind of a regional telecommunication company these days. But he still has, some of the businesses, on the side that I grew up with, which is pretty exciting.
Did I see on LinkedIn on your, I was doing a little snooping this morning and mental preparation. No, so fun fact about us is we grabbed lunch like 2 weeks ago, and normally I do a prep call where I start barraging you with all these questions so I don't sound like a complete idiot when I'm interviewing somebody. But we just grabbed lunch and we just started going on tangents about other random stuff. So some of the things I'm asking you, I'm genuinely asking you because I don't know. But so how, like, I always thought that there was some kind of banking relationship in your family. Like, did your parents have any type of relationship in the banking side of things? Or I thought banking was kind of in your blood, or you just got into that?
Yeah, I got into that. It's not a family dynamic per se. So my uncle growing up, his family owned the bank in town. And so when it's in his whole family, so when I went to college and then MBA school, one of the sons of the family that owned it, he was working down here in the cities, and I got an internship, and that's kind of how I got into banking. It's kind of a strange way, but it wasn't because the family was in banking.
And then the other thing I saw that I loved on your LinkedIn is that you, I saw when you graduated high school, but then I also saw that you were an operations manager at the linen company. And so that tells me that you were in high school and you were the operations manager. And I love everything about that. That just was like, that is hilarious. What is it like to be the operations manager of that company when you're in high school?
Well, I mean, let's call it what it is. I mean, it was a lot of cleaning dirty clothes and making sure, people got there and we got this stuff, washed, dried, and out the door in time. So, I mean, what Perm Linen does is it's kind of, Mayor Pride in the cities, or, some of those where they do the rugs, and stuff so we did that business. But the part that was really the part that I spent most of the time was with like nursing homes and resorts in the summers are really big. So if you stayed in a resort on the lake, right, they'd have laundry every week, and then they'd send it off. We'd clean it, dry it, iron it, fold it, wrap it, and send it out. So they would come in on Monday and it'd have to be all out back by Thursday because, their big time was the weekend. So you had to turn stuff around. So I spent a lot of summers, we'd work 3 a.m. to 3 p.m. shifts, basically, get the stuff in, get it out, and go on. But it was mostly family. So, we just BS'd and had a blast. And my cousins all pretty much, I have a big family. Almost all the cousins worked there at some point in their high school career. So it got to be crazy. But, it's a lot of dirty laundry. You have a background with actual dirty laundry. Yeah.
So if anybody ever asks you that, you can say yes. And then they'll find out that's
or as my wife likes to say, if you need to get a stain out of anything, I pretty much can help you do
it. You've probably seen it all. Let's not get into that. That sounds disgusting. All right. So then what made you decide that you wanted to go to U of M, Carlson?
So, I mean, I was always a Gopher fan. So in the 1990s, I'm a big basketball, maroon and gold, 1990s, they had the Final Four run. Well, I guess the negated Final Four run, right? Because that didn't happen, right? But I loved Gopher basketball. I love the U. it was close enough to home where I didn't feel like I was going too far away, and it was a good school, and that's kind of was the main driver at the time, and I loved it there. It was a great place to go to college, and I think it still is a good place to go to college.
Did you know that at that point at what point did you think that you wanted to get into banking?
Oh, I would say when I got the internship.
Really?
Yeah, like I didn't have like a plan to become a banker. I think from my standpoint, what I wanted to do when I was in college is I wanted to be in some form of finance, some sort of small business related, and entrepreneur type, vocation. I didn't have a good idea of exactly what that meant at the time. I knew I was good at, all my finance classes, accounting, all that kind of stuff, but I didn't know exactly where that would take me or what I would end up going or what path, So my goal was to come out of school and, try to find a career in that area and then kind of expand and maybe start my own company or do something, in that form. Little did I know that, banking is effectively working with tons of small and medium-sized businesses on their finances. That's effectively what I can do, or I get to do every day, which is pretty exciting. And it's kind of been a great mesh of my interest levels. So it's been really exciting from that standpoint. And then be able to run it. I kind of am running my own small business here as well.
Yeah. When you were getting your undergrad and you were thinking about getting your MBA, what was the trigger mechanism in your brain or someone influencing you that you should go get your MBA? Or was it just like, do they just ingrain that into your brain in the Carlson School of Management that you need to go get your MBA? Like, don't stop here.
No, that was my dad telling me like, if you're going to get an MBA, you need to get it right after school because your personality set would be that you would get out of school and never go back, never look back. So, you would get into a job or a career and just run. And he's like, you got to do it now or never and kind of get out there. And that's what worked. And I went to St. Thomas like right away. And, one of the, the full-time MBA program, which, I think is sunsetted, but it was a great experience. Met some really cool guys there and girls. It was just a blast. But yeah, it was my dad just saying, if you want to get an MBA, it's probably good to get it right away after school and, just kind of not check the box, per se, but that's kind of what it was, at the time. I think MBA has changed in terms of the dynamics today than it was when I was going to school, which, was that 05, 06 time frame, which is a different environment than what we sit today in terms of how MBAs play into your career and what they're used for. And, or maybe it's just my perception of what an MBA is and how it should be used.
It all has changed. You're talking to a college dropout here. So I think we're looking at two totally different ends of the spectrum, and somewhere in the middle lies the truth, right?
Yeah, exactly.
Yeah, right.
There's no perfect answer in this world.
There's not. So did you then get a job in banking while you were getting your MBA?
Yeah. Yep. Yeah. So I started as an intern, my first year of MBA school. And then I continued with that through my second year and then started full time when I graduated. So just kind of rolled with it and never looked back. Really, really enjoy everything about community banking from that aspect. So it was awesome.
Who was that with?
It was a bank called First Commercial Bank in Bloomington, Minnesota.
Okay. How'd you get hooked up in there? Was that relationship that you had with your uncle?
Yep.
All right.
Yeah. Cool. So
how long did you stay there?
I stayed there till 2012. So basically all the way through. And then, and that was an interesting story in of itself. That bank actually failed in 2012. So I stayed until it didn't exist anymore. And it was a crazy experience because you got to see something that doesn't happen very often and learn a lot of very stressful environment. Obviously, we had the Great Recession going on. So we had a bank that was started in 99, grew really exponentially. I kind of came in as the tail end of the growth, and then spent most of my career there actually on workouts and clean outs and trying to really work through, some of the challenges that we faced. And then in 2012, when I failed, Republic Bank and Trust Company out of Louisville, Kentucky bottom, I stayed on with them for almost 6 months, I think 7 months, I think it would have been. So from September through April of 2013, and then in May 2013, I started with Flagship here. So that's kind of a fun. It shouldn't call it fun. It was stressful, but hard work, but it learned a lot, and kind of I want to be able to be where I am today without going through that experience.
So, all right. So let's talk about that a little bit, because I think listeners will find this fascinating. I know I do. Is what are some? Let's start with this. What were some of the leading indicators that told you that, or told them that the bank was failing? Like, how does a bank fail?
Well, I mean, this is where it gets really crazy. So it's really a function of liquidity and capital, right? So you, as the bank loses money, it depletes its capital resource and it has to raise additional capital. Well, when you're going through the Great Recession, it was really hard to know the value of all of the loans in the books, because we didn't know the value of a lot of the real estate that was securing all of the loans. So, you're evaluating what is the current value for each piece of property that's securing each loan that's not quite performing the way it should be performing. In performing, I mean paying back the, all the principal and interest, providing all the financial information. And so you start seeing that, and you start making reserves against any potential losses. And with the Great Recession and kind of projecting, you start putting more and more into reserves, and then that depletes your capital position. So once the bank gets under basically 2% capital, the regulators, it's like a 90-day deal, and you'll be closed within 90 days unless you raise additional capital very quickly. So you watch that capital ratio, 8% in according to FDIC is well capitalized status, and then it kind of the thresholds go down from there. Most banks will stay above 8% well capitalized in a regular environment. You just see, from a standpoint of as that capital gets down or liquidity, because as your capital goes down, the regulators put stronger reporting requirements, stronger requirements on how you can raise money to fund your balance sheet, because the FDIC is an insurance organization. And just like your house, if you're not investing in your house, at some point they'll say that house isn't worth insuring. And so, they'll withdraw coverage. And what the FDIC will do is they'll start limiting what you can do. So you can't take broker deposits, can't take wholesale deposits. You have to match your cash flow in terms of your money in and out, and really kind of puts you in a position that, you can't fund your day-to-day operations because, maybe your balance sheet's not funded with core deposits. And that, that creates a challenge, and you can kind of work through it by selling assets, shrinking balance sheet, and kind of working through to the point that you can increase your capital. But it ultimately comes down to is you run out of capital to really keep the bank operating, and they'll have other banks come in, review your bank, and somebody will bid on buying it through the FDIC. And whether that'll be with an FDIC guarantee or not, that process goes, and then they'll close it on a Friday, and it opens up as a new bank on Monday.
Crazy.
And it's a different experience. It's not one I want to ever live again through.
Right.
So I operate our banks, with that in mind. But it was nuts, and it's a process. But I was just kind of watching capital earnings, and then the other piece is asset quality. I didn't really touch base on, those reserves and assets. There's a ratio out there called the Texas ratio that a lot of people look at. But really the internal metric that everybody looks at is your substandard assets, and, and basically assets that aren't really performing or have a high risk of potential loss and or a non-accrual, divided by your capital and your reserves, and as that ratio gets higher, the risk of the bank going down is higher. So, we monitor that very, very closely, and try to keep that number as small as possible. So, when you get into that higher risk rating, those are the ones that are usually exit credits, unless you've got a long-term relationship there and maybe they just hit a bump in the road. 2020 is a great example, right? There's a lot of good businesses that hit a bump in the road in 2020, and, they might have dropped into that bucket, but they're not exits because, we're willing to take that risk because we've got relationships and it was a 1-year scenario, and then you can kind of move them through, or maybe you can put them into what's called a special mention or watch rating. And that's kind of our internal metrics that banks use to kind of classify and manage risk within their organizations. So
yeah,
it can get really detailed. I don't want to bore your listeners.
No, but but I think that's fascinating, right? I think that you kind of shed a little bit of light. I mean, if you can get some of the industry jargon and understand some of those things, I mean, it's no different than running any other small business, right? It's just,
oh crap.
Right.
It's exactly right. I mean, it's the same thing as you would be looking at your client list and working through, how you're dealing with your business. I mean, that's if a banker's asking you for, your annual financial statements, your tax returns, we're trying to just make sure we're monitoring and managing the risk portfolio so that we can keep you out of that bucket. When we start getting, lack reporting, and then you start seeing lacks in payments or maybe missed real estate taxes, then you start to get into the bad or higher concern buckets. And then that's when you start seeing, more and regular frequent calls with your banker to find out what's going on because you're not getting, the reporting. That's kind of what, we're always encouraging people to, work with their accountants, have it maybe even on a streamlined process that, once you get your tax returns done, just get shot over to your banker. That way the process is more smooth. And that way, from a bank and I'm talking about people with lending, relationships with the bank.
Yep.
That way, the bank can keep on top of, your performance, how you're doing, what's going on, and maybe provide some guidance or, potentially, see some savings. I know I've, saved some clients some money because, I saw something on their tax return that didn't make sense given what I knew about their operation. Told them to check back with their accountant, and they talked with their accountant and were able to refile their taxes and save a fair amount of money. Just because, it was just a change in the way they were operating that created, value to them, to switch their tax reporting. And so that, I'm not giving them tax advice per se, but I'm telling them to go talk to their tax expert to see if that would apply to them. And that's usually good. And one thing about, community banks and relationship bankers in particular is that, our advice is always free, right? We're not charging you on an hourly basis like your accountant or attorney or, and you need one of each. But, we can at least point you in the direction of things we've seen. And so that's, some of the items, but I'm going off on a tangent from your original question. So
no, that's all good. So you answered literally like 3 of the questions I was going to ask you. So in that, so I'm really good. What year did you become CEO of Flagship?
Oh, that's a good question. So in 2013, I came on. It would have been 2014. So when I came into Flagship, Flagship was in a stress scenario, and we cleaned it up in 2014. I want to say it was 2015 that I came CEO. I was president in 2014, and then I think CEO in 2015. But I'd have to check I should know this stuff. Sorry.
I think it's fine. So I want to get a general, so you've been doing it for a few years and you've got, some experience under your belt. What is the primary role of a CEO of a community bank?
So the primary role that I work on, and I think every CEO has their strengths and weaknesses, but I think from my standpoint, I look at my role as to be a strong promoter of the bank, making sure our process and our client interactions are working the way they should. And then really in terms of processes, making sure our processes are set up in a way that allows us to meet our clients' needs and provide that relationship-based services to a wide variety of business, and industries, right? So, and then, the strategic side is probably the bigger item, is looking at, okay, what's going to make us succeed no different than what, a small business owner is where do we need to be? Where do we need to go? What should we be investing in? Technology is a bigger and bigger item. Because effectively what a bank is a big technology company. We sell money, right, on a technology platform that, you'd log into your online banking, you log into your, debit card transactions and interact with the Federal Reserve Bank system through your bank. And so we want to make sure we're providing services that allow you to do your business the way you want to do it in a fashion that's going to be, as flexible and customizable as we can make it. And so that's kind of where I spent a lot of time thinking about that. And then the other piece is managing our balance sheet. So, we're managing, how much loans we should have. Should we have more commercial real estate, commercial loans, 1 to 4 family investor properties, residential mortgages, how much of the portfolio mix, think of like your investment portfolio. How much do you have in, emerging markets? How much do you have in large cap, small cap? Just making sure you have a diversified base that, is safe. And again, risk management. I mean, that's kind of what banking is, and trying to manage that process. And obviously all the while making sure our employees are having fun and excited and coming to work every day, and making sure we're taking care of them, especially in today's environment, that's bigger and bigger. So
absolutely. Retention retention and acquisition is a topic that comes up in all of our Coalition 9 groups. So I hear you there. So you mentioned promotion. You personally are a big supporter of the startup community in the Twin Cities. And so we're just coming off of, when we're recording this, just coming off of Startup Week. What's the big attraction there for you?
What I look at is our banks support, businesses, as they grow and build, right? And Twin Cities Startup Week is the goal is to really put a spotlight on how we can continue to grow and support new companies and growth in our local economy in the Twin Cities in Minnesota. Mm-hmm. And so what better place than a bank that basically is a business, focused bank, or, business generated organization, to go out and support and invest back in our community and show our support for what's going on, not only from, dollars standpoint in terms of being a sponsor, but from being active and being at, different events, talking with entrepreneurs, bringing some of that advice, relationship piece, letting people know that not everybody is a big bank. Not everybody only thinks about, kind of more of a consumer, tactic, in terms of auto loans and home mortgages. There are banks out there that really are thinking about, well, what's your business need? How can we set things up to really help you succeed on the business front? And just try to, be out there and really encourage additional growth through, mentoring, support, training, conversation. A lot of people, it's just, even I don't know what I don't know. I think other people don't know what they don't know, and trying to mesh between the two. I learned a ton by going out and talking with people that are starting companies, because there's new and interesting things that are changing all the time. And I think I can provide value back on things that I've seen that maybe are valuable for them to grow or think about as they grow and build. So it's a win-win.
Yeah. Plus it doesn't hurt that you're active on Twitter. And so I talked about that earlier, and I figured, so I go on Twitter because I like it for information, because I can pick and choose the type of information that I want to get. So it's not just always in my face by some website or something. And you're pretty active on there. Why Twitter, and what has attracted you to that platform? And what's the whole jam there?
I've been on there a long time, right?
I know you have.
Everybody's got a vice, when it comes to social media, I always look at, there's people that are on Instagram all the time, on Facebook, LinkedIn, Twitter, now you got TikTok coming out. Twitter's been my one from the beginning, right? So that's my main focus. LinkedIn is a close second there. I'm active on both those, but Twitter, the thing that attracted to me is it's the interaction piece. So I've met a lot of people through Twitter, locally, nationally. It's just fun. Twitter's got a messaging platform within it. So you can be tweeting out on something, and all of a sudden, a guy direct message you, what do you think about this? Or I'm, there's a guy, in Kentucky that we've probably known each other now for several years. And, he's like, well, I'm looking at investing in this company, you know, and so I sent them a message. So what company is that? You know, so
right.
I'm big. I like, you get in your own little realm. Like you said, you go to the information where you like, right? So I like FinTwit, which is kind of finance Twitter. So stocks, you know, investments, you know, Federal Reserve, Treasury rates, that kind of thing. That's my jam. Obviously, that's where I live and work. And then small business Twitter. So you got all the guys right now is really big, is talking about how they're starting their companies, how they're growing their companies, what their troubles they're running into. Hey, here's some great ideas. There's this, you know, a guy who runs a HVAC company out in Ohio, John Wilson's his name. He's sharing all kinds of stuff about like how he's trying to grow his company and how he, you know, started and got into it. You know, there's other ones that are out there doing the same thing. There's guys that are out there investing in these self-funded search funds, or however you look at it, and sharing what they're learning. And it's a good community of people that are all trying to just share information, support each other. And yeah, maybe they aren't, you know, your best friends that you're going to go have a beer with because they, you know, live in Kentucky, or they live in Washington, or, you know, there's a guys, but you might get on a call and chat with them outside of it. I've done that several times. There's some of them that I met here locally, you know, through Twitter, and it just become good relationships over time. And I just enjoy it. It's good information. It's, you know, back and forth. People like to share. There's a lot of smart people out there that know more than I do. And I just like to tap into that where I can.
Yeah, for sure. So one thing I want to make sure and touch base on with you is I'm going to piggyback on our conversation from lunch the other day that nobody else was listening on. I want to talk. I don't want to go into this deep, so don't go down a rabbit hole. I'm gonna warn you right now. I'll cut you off. What is your opinion on cryptocurrency?
Oh, yeah.
I was hoping
you want me
to
laugh. Keep that to a high level, right?
All right.
A lot has changed in the last week. I mean, China came out and said that, hey, this is like illegal activity, right? Obviously that really hurt Bitcoin. You know, I think it's a super interesting topic, right? And I think there's the technology and there's some capabilities in there that are super interesting. I've read a ton of books, and I think I mentioned that last week. You know, when I first got into this, like last Christmas, I devoured like 4 or 5 books, and there's a couple of them. Infinite Game. If you are interested in Ethereum, you need to read that book. You know, I'm trying to think of the author. What's her name? But totally on the backstory and how it was created. A lot of interesting concepts. I think from an international transfer system, in terms of if you live in a country outside of the United States, there's a lot of validity to the cryptocurrency, you know, ability to move money, hold money outside of your country, you know, have it kind of more flexible component. I think from within the United States, I'm not a strong believer that you're creating a lot of new concepts. I think you're basically taking what the current financial system is and transplanting it into the new Bitcoin or Ethereum system, but you're not interlocking it with the real world to a level that really provides value. And the transaction costs in crypto are significant. The gas penalties in Ethereum are significant. When you look at like how easily you can move money within the United States without additional costs, it's much more quickly. And then you have the Federal Reserve, who at any point in time could come out with FedCoin and effectively displace the stable coin market in all of crypto. So you got a high risk standpoint. So my viewpoint on it is that it's a super interesting topic. I haven't seen a ton of stuff that I think is applicable to people that are in the United States. I'm not a huge believer in, you know, that this is going to be some place to displace the US dollar. I'm not sure that it'll actually occur in that fashion. I think there's a risk that the Fed could really shake the market up in a material way. You know, China's obviously shaking it up in one factor, but the Fed really carries the big stick. But I do think there's a lot of interesting things, and I think particularly on the international side of things outside the United States, there's a lot more value and ways to use it and really create, you know, obviously wealth and movement of money in that process. But I think the transaction fees there in terms of international movement of money has always been higher than within like the United States.
Yeah. I love that you just hammered out that whole, what we talked about. We talked about it for like 20 minutes. You bang that out in like 3 minutes. That is
You told me to condense it. Don't go down.
That's a really good summary. And I think, that's a really good point around the transaction fees, and then, the global versus domestic debate. I think that's a really good debate. So I think I had a guest on, Callan Faulkner, who's a huge fan of Bitcoin. I think it'd be interesting to get you two on a podcast together, and we can have a big debate about cryptocurrency. And I'm not saying that it would be good or bad or otherwise. I'm just saying it would be good. I think I just find that topic so fascinating.
It is a super fascinating topic. And I have, some buddies I went to college with that always harass me on Twitter, like Mark, his name, he'll ping me like, so Robinhood was going to come out, or not, Coinbase was going to come out with a new thing. The SEC shut it down this last week, right? So he pings me, as soon as that comes out, because I was, saying like the SEC and Coinbase CEO are taking it out, and he's on the crypto side of things, and basically like the SEC won this one, and so we kind of bounced back ideas, and he's the one who gave me the book recommendations to start with, like, hey, if you want to get into this and you want to understand about it, read this stuff. And, if you want to learn about DeFi or DeFinance, which basically is a taking kind of the traditional banking system and building it in crypto, read this paper and this. So yeah, he's kind of been my resource to information into the space. And there's just so many interesting things around it. I'm just not sure how many of them are applicable, or that maybe it's you don't know what you don't know about what the current banking system does and how it does it compared to what is being built on cryptocurrency, because some of what's being built isn't really creating anything new. It's just lifting one and placing the other with more transaction costs, and that's not valuable. So, trying to think through how you do that in a way that is valuable, I think, is the challenge in the question.
Right. Well, with that, my brain is now mush, because you've made me think more than I have ever had to on any of these podcasts. So I'm going to get into how people can connect with you, and I want to talk about a couple more other things. But we're gonna transition into 9 questions, which when we were talking before recording this, I know you're really excited about. Right. So can you confirm to me that you have no idea what I'm about to ask you?
Yeah, I have no idea.
All right, good.
None whatsoever.
All right. Question number 1. What was your first concert?
Ooh, Garth Brooks, Fargo Dome.
Yeah.
Great concert. I mean, that was a blast.
Wow. What year is that?
Well, it would have been like 91, 92.
Oh, yeah.
I mean,
right in the heat of things.
Yeah. I mean, I was 9, 10 years old. Yeah. We hike it up to the Fargo Dome. I think the Fargo Dome had just been built, or was right around there. So I might be off, and maybe they check me on this, but yeah, right. It was like a blast. And growing up near Wee Fest, I'm a big country music fan. So, yeah, Garth Brooks is one of the kings there. So it was just a good time.
Awesome. What is your favorite smell?
Ooh. That's a good question. I'm gonna go with apple pie.
Ooh, I like that. Yeah, what's wrong with that? I like that. That's a good one. It's that time of year too.
Exactly. That's what popped in my head.
Yeah.
It's always a good time for apple pie. There's never a bad time for apple pie.
No, there isn't. It just is. Fall is like apple pie time because apples are coming in. They're getting ready to be picked. So let's get after this thing. What is one thing people wouldn't know about you?
Ooh. Well, I would have said that I wasn't born in Minnesota.
Sorry, we stole that one at the beginning.
Yeah, I mean, I'm a pretty transparent guy, so there's not a lot of hidden secrets. I'm struggling with that question, Aaron. I'm being honest here.
I'm gonna. So one, we already tapped into your passion for Twitter. I think that was one thing people probably would have never known about you if they're not on Twitter. 2 is I think you're super interested in crypto, which I thought that was great. But then I'm gonna throw another one at you. Is that don't you play basketball once a week at Lifetime?
I suppose, yeah. No, I play at Eden Prairie Lifetime. Yeah, I try to get out there for noon ball.
Yeah, I love it. And
if listeners out there, I mean, Monday, Wednesday, Friday, there's always a game. It's the Eden Prairie location, and it's not like a bunch of all-stars going out there. It's, you got guys from, 23-year-olds just coming out of college, that maybe played ball and are awesome, to, guys like me that are out there just reliving their glory days.
Just trying to catch their breath.
and out of breath after 20 minutes.
I love it. I would be one of those people. All right. What is one quality in a person that impresses you?
Resolve or grit. I think somebody who's faced with adversity and finds a way to stay committed and work through that challenge with resolve. I think that is a talent that is hard and harder to come by, because in today's environment, it's so easy just to maybe not quit on something, but to move along, but kind of like staying focused and working through it might not be the easiest path, but it'll pay off in the end. And just watching somebody go through that, to me, I give a lot of credit to. So, I mean, to me, if you've been through a significant challenge in your life, it could have been personal, could have been work related, and you come out the other side, with a smile. I mean, to me, that's pretty impressive.
Yeah, I'm with you on that one. What are 3 words that describe you?
Patient, integrity, and geez, I would say gritty, but I just kind of said that.
Yeah, there's nothing wrong with that.
That's kind of how I look at myself,
Yeah, there's nothing wrong with piggybacking on that one. I like that. Yeah. What is the last gift that you've given someone?
Oh, well, that's easy because it was my wife's birthday this last week. So, all
right.
So I gave her an Apple Watch for her birthday.
This
last week, and she'd been wanting one, and I thought that was kind of exciting.
Sweet. Yep. I love my Apple Watch, so that's a great gift. Where is your quote unquote happy place?
Oh, this one has been of much debate in my household here lately. So, we've been talking about, where a happy place is. And I think for me, it's around water in the woods, so, I love the outdoors. I grew up obviously in rural Minnesota, but, hiking, moving around, kind of being out, and added benefits, I get fortunate of being able to do it with my family a lot of times. So we like to get outdoors but really just being out amongst, so like right now it's perfect. Fall leaves are changing colors. You can go for a hike, like Lebanon Hills is close to my house. You can see the water, you can go out for as long as you want. There's plenty of trails, and it's just a great place to be.
Yeah, I'm with you. I love the outdoors. I spent all Sunday splitting and stacking wood, and I was in my own little world back there with my earplugs in and my chainsaw and my log splitter, and nothing makes me happier than being outside, brother. Yeah. What is your biggest pet peeve?
Ooh, smacking. Absolutely can't stand it. My kids will let you know if you're eating your cereal or you're eating at the table and your lips are, it just drives me crazy.
Oh, that's
by far my biggest pet peeve.
I love that you go from what is one quality in a person that impresses you to like this really thoughtful, like around resolve, and your biggest pet peeve is lip smacking. Andy, that says so much about you, and I love it so much. Okay, last question. This has been good, man. What is the best piece of advice that you've ever received?
Oh, it's a good one. And there's so many good pieces of advice out there. Trying to be thoughtful about my answer. But, I hate to say like the work hard and luck will find you kind of idea, but to me, it's kind of the concept is, and this is in personal relationships and in life, in work. And really what I'm trying to get at is if you invest something and you invest in the people around you, in your relationships, in your job, in your family, things will work out. Mm-hmm. If you invest in your wife and your relationship, you should have a stronger relationship. If you invest in your relationship with your kids, you invest in work and focus in that. That's the success. Is the process of doing that will end in good places. So I don't know if that makes sense or not, but that's kind of how I took out of it. And I've really tried to do that over my career and my life. I'm better on some days than others, as everybody is. I'm no perfect person in that, but in terms of, I think, just trying to remember that and do that piece. That advice to me as a kid growing up has always been something that stuck in my mind.
Well, you're a big relationship guy, and when I bank with Flagship, and one of the biggest reasons I bank with Flagship is when I got to know you, we struck up a good relationship right at the beginning, and I love having that relationship between what I do and what you do. And even though they're polar opposites from an offering standpoint, we have so much in common from the perspective is that we just care about other people. And so I can see how that resonates with you.
Thanks, Aaron. Appreciate that.
Yeah, man. All right. So, we talked about you being CEO of Flagship. You're also the president of Security Bank and Trust. So you've got a lot going on. If people want to get a hold of you, how can they find you?
Twitter's obviously at Schornack, so SCHORNACK. You'll find me out there. You can ping me. I check that, like people check Facebook, I check Twitter. So I'm out there. LinkedIn, you can find me, Andy Schornack, again there, and my email is just ashornack@flagshipbanks.com.
Sweet.
So, I mean, I'm out there and available. Like I said, if you're on Twitter, that's a great way, to get a hold of me. But I'm pretty connected on social media, so you can pretty much find me on anywhere you like to go.
Yeah, I love it. That's what I love about getting to know you and becoming friends, is that you're very accessible and you respond quickly, and you've been a great guest today, man.
Well, you likewise. I mean, you guys are pretty awesome over there, and I appreciate you, Aaron. Everything you've been doing at Coalition 9. I mean, it's amazing. It's amazing. So great job.
Thank you very much. Good. Well, on behalf of Andy Schornack, this has been the Power of 9 podcast. I am your host, Aaron Eggert, and I want to thank you for the privilege of your time. Cheers.
Thanks, Aaron. Cheers.